In this presentation, we will work a problem recording transactions related to land, machinery, and equipment and leases. We're focusing here on the general fund and then the government-wide type of activities. And we'll have a couple transactions in the capital projects fund. And I have our information on the left side. We'll enter that information into the blue areas into the general journal. We will then post them to a worksheet, the worksheet having a beginning trial balance adjustments that we will post to, then the ending trial balance. This will help us to ground us to see the type of accounts we will be working with. Green accounts being the assets, the orange accounts liabilities. Light blue is what would be the equity section if we were in a for-profit organization, assets minus liabilities here, fund balance. The dark blue is what would be the income statement in a for-profit organization, temporary accounts. Those accounts we would generally expect to be closed out to what would be the equity section for a for-profit type of organization. Same here, although it could be muddied up a bit because we might have some estimating accounts as well as the normal what we would think of as income statement or clearing or temporary type of accounts. Then we're going to do the same kind of process for the government-wide type of activities, recording the transaction and then posting them to something that is beginning in balance adjustments and then the ending balance so that we can see how these accounts are behaving. Same thing for the capital projects funds. We're going to have where the journal entries will be entered and then the worksheet, so we post those and see how those accounts will behave. First transaction, we have a donation of land, the acquisition value, and then the recorded on the donor's books value. Because the general fund is on a modified accrual basis and typically thinking about the current type of activity, the current flows, balance sheet usually having the current assets and liabilities, no activity here. So no activity on the general fund. Then we'll scroll over to the government-wide activities. If we scroll over to the government-wide activities, we're going to say that we are going to put it on the books for the government-wide activities. We're going to say that land has gone up, so we're going to increase the land. It will be, as we would expect, an asset type account. We're not going to expense the land. We're going to put it on the books as an asset. I'm going to say this equals of the land, and we'll pick that up. And then the other side, we're going to call it program revenue, and then we're going to group it. We're going to group it into the, in this case, culture and recreation capital grants account. So it is going to be a revenue on the other side. We're going to say this equals for the donation, scrolling down and picking up our revenue type account. Now I'm going to pick up the number from the information we have to the right. I'm going to say within P3 equals. I'm going to scroll all the way to the left to pick up the number. Now the question is, which one do we pick up, the acquisition value or the recorded on the donor's books value? Now, obviously, if it's on the donor's books, that's basically their records, what it's recorded on at their records. What we want to do is put it on the books at what we would think, you would think more of the core, like fair market value at this point in time, the value of the donation. So we're not going to put it on the books, in other words, at the donor's value. We're going to put it on the books more of what we would think the current value is with the acquisition value. So we'll pick up the acquisition value, and there are our debits and credits. Let's go ahead and record this. It should do kind of what we would think. We're going to think land is going to go up. That would be what is expected. Remember that the government-wide activity is on more of a normal type of accounting accrual basis. So the land is going to go up. I'm going to be in U8. I'm going to say equals and point to the land to increase the land item. And the other side is going to be down here in the program revenue. We are down here in line 18. So we are in U18 equals, scrolling back up, and we're going to pick up the credit. Then here is the credit, and there we have it. So if we scroll back down, this is going to be our total in the what would be the income statement type of accounts. And we are back in balance given the green zeros. Let's scroll back. There will be no activity in our capital projects account because we're going to say that the purchase here was not related to the capital project for our capital project fund, but for general government-wide use. Back to the left and see the next item we have, which is going to be number 2. Number 2 says we sold machinery. The historical costs, $34,500. The accumulated depreciation, $28,250. And the sales price, $5,525. We're going to start off with the general fund. And this is going to be a little bit unusual because remember, the general fund is on the modified accrual basis. We're looking for the flow type of activity. So the basic flow activity that happened is the sales price, the cash that was received. The amount of the machinery up top is of course going to be something that would be recorded on a long-term basis and reported on the books as an asset, and therefore it's not something that typically would be on the general fund. So we're going to record the activity here. We're going to say, all right, the cash is going up. So the cash is a debit. We're going to increase the cash. And then we're going to record the other side to other financing sources. So I'm going to say other financing sources equals, and we'll scroll back down. We're not going to call it revenue. We're going to put it into other financing sources for the proceeds of capital asset sale. So there's going to be our debit and credit. And again, we're just recording the flow activity, which is going to be that 5,525 on the debit and on the credit. So there's going to be our journal entry into the general fund, the fund accounting, the modified accrual accounting, the one that doesn't have the long-term type of activity. We're going to scroll up to cash first. We are in cell K3. This is going to be equal to. Scrolling back to the right, we're going to pick up the cash amount. And then we're going to look for that other financing sources. So other financing sources are right down here in cell K17 equals, and we'll scroll back up and pick up the credit. There is the credit, and there we have that. Now let's see, now we're back in balance with the green zeros. Let's do the same type of activity now into the general fund, or the government-wide activities. This is going to be on the accrual basis, more similar to what we would expect to have happened. If we sell equipment, typically, if we're talking about a for-profit organization on an accrual basis, usually, of course, if we got cash, cash is going to be increasing, so we could say that's going to be the same activity. Then, of course, the machinery is going to go off the books. So that's probably one of the first things we would think about. We'd say, okay, what did we sell? This machinery, it's an asset, it's on the books or something within this account. It's on the books as an asset. We need to make it go down. We're going to do the opposite thing to it. We're going to credit the machinery. Now, note, I'm not going to build this journal entry in terms of all the debits on tops and the credits on the bottom. I'm going to build it in the way that basically makes the most sense. If you want to rearrange it then to have the debits on top, you can do so. However, if it makes more sense to not have the debits on top and you can read it better, then in practice, that's probably the way to go. If you have a test question or a supervisor that wants the debits on top, then you're going to want to readjust the accounts. But I would first think through it on what makes the most sense. So we'll have the machinery and equipment. It's going to go off the books for the cost, whatever the cost is. Then we're also going to have to reverse whatever the related accumulated depreciation is, because that's the book value of the equipment. So we're also going to have to take off the books the accumulated depreciation related to it. And then whatever the difference is between the cash and the book value is going to be the gain or the loss. And that's going to be somewhere on the income statement. And it looks like we have an account down here called loss on the sale of equipment. So it looks like it's probably going to be a loss. And so we'll say those are going to be our numbers. Let's pick up these numbers then. I'm going to pick up this number from the data. I'm in cell P6. I'm going to say equals. Scroll all the way back to the data. We had the sales price as that 5,525. So that's going to be our first number. And then I'm going to be on the credit side for the machinery and equipment. We're going to credit this amount because it's going to be decrease in machinery and equipment. I'm going to put a negative instead of an equals and go all the way to the left. And we want to pick up the historical cost to 34,500 and enter. So there we have that. And then we want to reverse the accumulated depreciation. It's a contra account, as a credit balance. We're going to debit it, doing the opposite thing to it for whatever the value of the accumulated depreciation is. So I'm going to say equals on the debit side, and that's going to be the 28,250 and enter. And now we want whatever we need to make this thing in balance. So the debits add up to 33,775. The credits add up to 34. We need another debit. So we need another debit. I'm going to do that with a negative sum and then sum these items up. So negative sum, that's the plug formula. I would call it a plug formula. And then we have the debits then at 34.5 equaling the credits at the 34.5. So that's how this would be more of a normal type of transaction. Again, if you wanted to reformat this and put the 3 debits on top, then you could do so. I'm going to leave it as is and post it as is. So we have the land. I'm sorry, not the land. We're at the cash. Cash is up top, so we're going to go to the cash item. We are in U3 equals. I'm going to scroll back over and pick up the cash, and that's going to increase the cash. That's what we would expect. And then we have the machinery and equipment. It's going to be credited. Here's the machinery and the equipment. We're going to put that in U10 equals, scrolling over, picking up the machinery and equipment, and it goes down. And then we're going to pick up the accumulated depreciation right underneath it. So accumulated depreciation in U11 equals, and we'll pick up that amount. And then finally, we have the loss on sale of the machinery. That's going to go on the bottom. Loss on the sale, we are in U22 equals, and scrolling back over to pick up the U22, which is the loss on the sale of machinery, of the 725. And there we have it. That puts us back in balance. There's not going to be any activity here in our capital projects fund because we're going to say that this machinery not related to our capital projects fund. Next, we're going to go to number 3. Number 3 says there's a car lease for use. We have the payments of $1,200 and the present value of the lease payments, the $20,700. We're going to say that this is a capital lease. We'll first take a look at the government-wide activities because the recording of the capital lease should look familiar on the government-wide because are on the normal accrual basis as opposed to then what we'll do going back over to the general fund, which will be on the modified accrual basis. So we're going to put this on the books as a capital lease. So let's scroll over to the government-wide activities. So we're over here in column O, and we are on number 3. Now we're going to put this on the books basically as an asset because it's a capital lease. So we're going to put it on the books as an asset, and so we're going to say this is equal to, and we're going to have leased assets here for the machinery and equipment, and enter. We also know that we made a payment. So the payment that we made is cash. So that is what it is. We credited cash. That's going to go down. So that is what it is. Here's the cash count. That's going to decrease. And then the difference is going to go to kind of a liability. It will be a liability type of account similar to a note payable if we financed the equipment. So that's going to be some type of liability. We're going to call it the leased obligations payable. That's going to be our liability account. Now the cash that went out, I'm going to say negative because it's going to be a credit in cell Q12, negative, and then scroll over to our activity. We want to pick up the 1,200, and then the difference is going to be going into the liability account for the lease obligations payable. I'm going to do this with the negative sum or plug formula in cell Q13, negative SUM of these items, and we have the 20,700. So this should look familiar from accrual accounting, although it is a little funny because we have a capital lease that we're recording, kind of like a purchase. So we're going to scroll back over and we're going to say the lease then is in cell U12. Within U12, we're going to say equals and scroll back over and pick up that debit of the 21,900. Then we want to pick up the cash decreasing. So cash decreasing is going to be up top in U3. There's something in it. I'm going to go into it. I'm going to do that this time by hitting F2 just to practice that. Plus, and then I'm hitting F2 so I can use my scroll. I'm scrolling back down. So using the mouse a little less. And then here's the credit. We want the 1,200. And then we're looking for the lease obligations payable. That's going to be down here to lease obligations payable. We want to be in cell U16. Within U16, we're going to say equals. Scrolling back up to that credit, that 20,700. And there we have that. There's the credit. That's what we would normally basically expect. That puts us back in balance with the green zeros in the totals and no effect on the what would be the income statement type of accounts because we are in essence recording it as a purchase. Now let's do the more unusual activity with regards to the modified accrual basis. So we're going to scroll back over to the general fund now. Now this is going to feel a little bit strange to record this on the general fund. Remember, we're on the modified accrual basis. This is how I would think through it. Normally we would put on the capital assets on the books. We would put the asset on the book. We don't put the asset on the books for the modified accrual because we don't have any long-term assets. And therefore, what we're going to be reporting here in the general fund is the flow activity, which is going to be more of an income statement account activity. We're going to debit an expenditure type of account. We're going to have the expenditure for the general government, similar to the expense type of account. That's going to be for the amount that we would have put on the books, which is equal to the 1,200 and the 20,700. Now, the cash, of course, is cash. Cash went out. It is what it is. It's a current type of flow activity. Therefore, it's going to be on the modified accrual basis. We'll credit cash in the same fashion. I'm going to be negative of the cash that we're going to credit. And then the difference, the negative sum of these items, is going to be the amount we would put on the books you would think for a liability. But again, We don't have like a long-term liability as would be the capital asset type of liability that would result here in modified accrual, and therefore we're going to be putting this into other financing sources. So we're going to call it other financing sources lease agreement. So there we have it. So you'll note we kind of net this out on what would be similar to the income statement account, the temporary type accounts. So the net down here is going to be the 1,200, and we're not going to be recording long-term assets, long-term liabilities in the general fund. Let's record this out. So we got the expenditures here. Scrolling down for the expenditures for the general government, we are in cell K21 equals. And then we'll scroll over to the debit up top. So we've got the expenditure, and then we're going to record that cash next. So here is cash. That's going to be on the credit side. So we'll scroll back up top, and we're in the cash area in K3. Double click on that, go to the end of it, and plus, put the cursor back down. I'm going to scroll back down and pick up the 1,200. Then we're going to pick up the other financing lease. So that's going to be down here in more the temporary type of activity. Other financing sources. In cell K18 equals, and scrolling back over, we're going to pick up that 20,700 and enter. So there we have it. You can see it basically nets out in the temporary type of accounts here, and then we record the cash up top. Once again, no activity in the capital projects fund here because the machinery not related to the capital projects fund. Now we're going to go to number 4. So scrolling back to number 4. Number 4 says we completed a capital project started in the prior year. We have the total cost of the $9,495,800. The financing from bond in the prior year, $8,820,200, and the financing from capital grants in the current year, and then we have current year expenditures for the capital project. Let's start off recording this activity in the government-wide activity because that's going to be on an accrual basis. It'll be more familiar to what we have seen with regards to this type of activity. So first thing we're going to do is say that cash was received with relation to the financing from a grant. So in that case, cash is going to go up. We're going to say cash is increasing, and we're going to say that the other side is going to go to some type of revenue account. We're going to call it a program revenue account, and we're going to put it into program revenue for public safety capital projects grants. So, and the amount's going to be equal to, I'm in P15 equals, going to scroll to the left, and we're going to pick up the amount of the grant, the $675,700. That will be the debit, that will be the credit. So there we have that. Let's post that out. So we have cash up top. So we're going to go up to the cash items. So cash is up here. We want to be in cell U3. I'm going to do this with the keyboard this time by hitting F2, going to the end of it, at the end of it, plus, and then F2 so I can use the keyboard back. Scroll back down, and we're going to pick up the debit amount in cash, the $675,700. Then we're looking for the next one, which is going to be the program revenue public safety. So we're going to scroll down to program revenue public safety. We are in U19 where we say equals, and then scroll over and point to that credit, increasing in the credit direction, that then putting us back in balance. We're now going to be on 4B. Next, we're going to record this current year's expenditures. We're going to assume these are expenditures of cash into the general fund. So we're going to scroll back over and say this was for work in process because we're constructing something here, and therefore we're not just going to expense it. We're going to put it on the books as an asset uncompleted thus far, therefore put it into the work in process. So we're going to say construction work in process. There's the debit. That's going to be 4 equal to. We're going to scroll back to the amount of the $1,086,340. And then we're going to credit for the same amount, and the credit's going to be going to cash. We're going to say that we spent cash in this amount for the work in progress. Now we'll record this out. So we've got the asset first, the construction work in process. So let's go back up top, and that's going to be in cell U9. So within U9, we're going to say equals and scroll back down and point to that debit of the $1,086,340. And then we have a credit, that credit being to cash. There's the credit on the journal entry. We're going to scroll back up top. Going to do this with the keyboard once again rather than the mouse. We are in U3. I'm going to say F2 plus, and then push F2 again so I can scroll back down with the mouse, use the arrows, and go to the cash and enter. So there we have that. So now we are back in balance. That's going to be what we would normally expect with the construction process. We might not be as familiar with that unless we do accounting for profit for some kind of construction type of item where we're capitalizing the expenditures, but it's going to be similar in this case. The last transaction we're going to do here, the government-wide type of activities, should look familiar to if you worked with the construction process. We're going to be moving the information that we've been putting together, the construction in process, now having this amount in it, $9,495,800, and we're going to move it out of the work in process account and put it into what has been built now and is now finished, which is going to be the building account. So we're just going to move it from one asset type of account to another asset type of account, indicating that the construction process is now over, and now we're moving it to the building account. So we're going to say, okay, scrolling back over, that's going to be a debit. It's going to increase the building. So the building is going to go up. That's what we've constructed. And we're going to credit the work in process, indicating that we are in the process of building the building. But now we're not in the process because it's been built. And the amount is going to be for that $9,495,800. Whatever we need to do to get the work in process to go down to zero, that's going to be the debit and the credit. That number came from here, $9,495,800. Hopefully I pick up the right one. So we'll see when we post it, it should go down to zero. Here's going to be the building. So up top, we'll say this is the building. We're going to be in cell U6. Within U6 equals, scrolling back down, we're going to pick up that debit in the building and enter. So we've increased that account. Then we're going to go to the work in process account. That's where the credit is going to go. So scrolling back up, we're going to be in the work in process. So here we are in U9. Within U9, we're going to say F2 plus F2 to add our account. And that's going to be our credit here. Enter. And that puts us down to zero and puts us back in balance. So once again, we've moved this account down to zero. We've moved it to the building. So now we're going to go back to the general fund. No activity in the general fund because this is going to be a capital project type of activity. We're going to be working with a capital project fund. So within the general fund, we're going to say none, no activity here. And then we'll scroll over to the capital projects fund. So capital projects fund, we're tracking specifically this capital project. And we're down here on number 4. We're going to record here as well the cash that was received from the grant. So cash is going to increase. So we're going to increase the cash in the capital projects fund. And the other side is going to be going to some type of revenue account. So revenue account, this is from the grant. We're going to say this is equal to, and we'll scroll back over and it's going to be the same type of transaction that we had in the government-wide activity. So we could pick it up here. It's going to be the 675.7. Pretty much the same transaction, although there's more detail in the revenue type of account in the general fund. So here's our debit and credit. Cash is increasing. Let's post this out. We're going to scroll back up top in E3. This is equal to, scrolling back over to the cash account, debiting the cash account. Next, we're going to record the revenue. So here's the revenue down in AE13. This is equal to, and we'll pick up the revenue item and enter. So next we're going to pick up the cost, the construction costs. Now here, because we're in the capital projects funds, remember we're on a modified accrual. We're looking for the flow, short-term flow type of activity. We're not putting, in other words, the construction on the books as an asset as we typically would under normal accrual accounting, because we just keep on putting it on the books as an asset because we're making a capital project asset. Here, the whole point is to track the flows. So we're tracking the flows of this project. The construction costs, all of them that were expended this year, we want to put into basically a timing account, then a temporary account, a construction expenditure accounts. So this is going to be equal to the construction expenditure. And then the credit is going to be going to cash. So this will look unusual. This should look strange if you've worked with, large projects. Then it's going to be a little bit funny because normally you would put it all into some type of asset account, work in process, capitalizing the project. Here, modified accrual, looking at the flow, different. All right, so here we're going to pick up the amount. This is going to be equal to, scrolling to the left, and we're picking up the $1,086,340, and the credit is going to be for the same amount. Let's go ahead and post this out. We'll start off with the expenditure. The expenditure is going to be down here in cell AE14 equal to, scrolling back over, picking up that debit. There we have it. Then we're going to pick up the credit. That's going to be going into cash. So if we scroll up to cash, we're going to be in AE15. 3, and we'll say F2 plus F2. So we're doing it with the keyboard, F2 plus F2. And then we'll scroll down and we'll pick up that credit. And so there we have this. We're going to be back in balance. Now we're going to move on to number 5. So we're going to be back over here in cell A22 where we have a half-year straight line depreciation on the capital asset that we're going to record. We're going to say that there's a 30-year useful life. So let's say what we're going to do then is record this first into the government-wide activity. Let's think about that first because that should be what would be most normal for us. We now have this on the books. We've got our new piece of our new building of $9,495,800. Now we're going to depreciate it, which would be the normal process that we would think of with relation to a building. So we're going to use just a simplified method so that we can just record the depreciation, see how it would work. Straight line method, we're going to say for a half year. So we're going to have half year straight line method. And so we'll say that then would be calculated as the 9,495,800 divided by 30 years was how many years? And then we're going to take that and divide it by 2. So that's going to be the amount that we are going to record for depreciation. The journal entry for depreciation, as we know, will be a debit to depreciation expense on the building and a credit to accumulated depreciation. And this should look familiar. This is on the accrual basis. This is how depreciation looks when it's recorded. So we're going to say that this is equal to, once again, the amount of, actually we can pick it up right here. It's right there. And then divided by 30 divided by 2. So there we have it. Those are our numbers, debit and the credit. Let's post that out. So we're in the depreciation. So we'll scroll to the right. We are in cell U20. Within U20, we're going to say that equals and scroll down to the debit of the 158,263. And then we want the credit in accumulated depreciation. So scrolling back up, we're looking for accumulated depreciation related to the building, which will be right under the building in U7 equals, and scrolling down, and we're going to pick up the accumulated depreciation and enter. So there we have that. So now we've recorded the depreciation as we would typically do in an accrual basis as is being used in the government-wide activities. So if we scroll down to the general fund, then we don't have any activity for number 5. So nothing on 4, and we have none on 5. What about the capital projects? That's where we're actually tracking this building activity. So if we close out to the capital project, we scroll over here, then we're going to have actually no activity in the capital project either. Why? Because we're tracking the flow. With a modified accrual basis, we're not recording the depreciation because we're tracking the flow of the activity and the cost of it. So we have no journal entry related to depreciation here either. Next, number 6, we're going to say that there is an impairment loss. So we're going to record an impairment loss. We're going to say it's on the equipment. We got to reduce the value then of the equipment. Let's first do this on the government-wide activities because that's where it's going to look most familiar. We're going to say that our equipment, some equipment recorded here, has been impaired. And if that's the case and it's declined in value substantially, we're going to say, all right, we need to record that. We need to decrease the value of the machinery and the equipment to line up to the impairment. So that means that this account is going to go down. So we're going to credit this item. So we're going to scroll down and say that we need a credit in number 6 to the machinery and the equipment. So the machinery and equipment, we're going to scroll back up and say, it's going to be credit. Actually, that should be on the bottom. Put it on the bottom with the credits to the machinery and the equipment. And then the debit is going to be some type of expense. So we're going to say this is going to be some type of expense. And we're going to say it's in the general government expense. The amount then is going to be equal to the amount of the impairment, which is this amount that we picked up from our data. So there's our transaction. We're going to decrease the equipment with a credit because it's an asset. And we're going to debit the expense. So let's debit the expense first. Scrolling back over, we're going to be in cell U21 is equal to, scrolling back to the debit and enter. There we have that. And then the other side is going to go up to the equipment. So we'll scroll back up to the machinery and the equipment. So here we are in cell U10. We're going to say F2 plus F2. And scroll back down, and we're going to pick up that credit amount and enter. So there we have it. So the machinery and the equipment. So what about the general fund? If we scroll back over, general fund, no activity here because we're on the modified accrual. So we're not going to be reducing the value of a long-term asset, which isn't on the books under the modified accrual system. And if we go over to the capital projects again, no activity here because this equipment supposedly not related to the capital project. And even if it were, again, capital projects recording flows, not long-term equipment, and therefore we wouldn't have that on the books as a long-term type of asset.